Good afternoon and good morning. It is my great pleasure to welcome you to the Flagship seminar on connected infrastructure, transformations and trends. In this seminar, we will see how the world and the world of infrastructure is fundamentally changing under the influence of new technologies. It is now my pleasure to invite AIIB President Jinli Chun to deliver a keynote speech on the AIIB's views and visions to meet this transformation. President.
Thank you. I'm delighted to join you today for this flagship seminar on connected infrastructure, transformation, and trends. At the heart of today's discussion will be how the world is fundamentally changing under the influence of new technologies and how it is adapting to external shocks. This issue is at the core of how AIIB defines itself as the 21st century multilateral development bank. We will explore how new technologies are affecting both new and traditional infrastructure, and also some of the challenges that have emerged, including from the pandemic. There are clearly some great examples of how technology is making infrastructure more efficient and sustainable. For example, climate change is putting immense pressure on water systems. However, technology is helping us find ways to reduce the wasting water and be more accurate and efficient in how we distribute it. This sector is undergoing robust modernization to make the most of the latest technology. We're also seeing cities transforming rapidly. The continued growth of megacities means seamless mobility slowly replacing more traditional transport solutions, and smart connectivity helps manage more sustainable urban environments. And yet, this trend and the pandemic also raise difficult questions for urban transportation. We're facing a dramatic shift in the demand for transport infrastructure, with lockdown measures and remote work leading to a decline in demand for public transportation. What we saw as universal solutions for mass transit and financing models are now being questioned, and we are seeing a shift to more custom-made and location-specific solutions. The pandemic also has led to supply and demand imbalances in the energy sector. The recent rebound of oil prices and energy shortages, on the one hand, make the renewables asset class more attractive again, but they also mean fossil fuels are here to stay, as some countries are braced for a cold winter. The transition to a greener economy is fraught with challenges. Adjusting supply to where demand moves geographically is becoming challenging. And finally, the digital economy is no longer a fringe activity. It represents around 15% of global GDP and has doubled in size since the year 2000. This sector is creating a huge number of jobs, up to 40% of new employment, according to some sources. The investment gap is, however, also huge. It has been estimated that it will cost $438 billion to reach universal connectivity by 2030. And like many others, the sector is characterized by old and new divides. The gender gap is measured at 17% globally, but is more significant in Asia, the Middle East, and Africa. The cost of a broadband subscription is 50% more expensive in Africa than in Asia. The download speed between rural and urban areas can vary up to 70% among G20 countries. Only 30% of the global population is digitally proficient, effectively making efforts on financial inclusion, distance learning, and health access much more complex. So, the world of infrastructure is changing, and technology is at the center of these changes. We can no longer look at infrastructure as a traditional business as usual sector. The role of multilateral development banks in supporting the development of digital infrastructure must grow. According to the International Telecommunication Union, the private sector will cover only 67% of the financing gap. Meanwhile, the combined lending commitments of the multilateral development banks to the sector right now do not exceed 3 to 5% of public investment needs. The pandemic has shown us how reliant we have become on digital and connected infrastructure, and yet there is still a question of whether there's sufficient investment being made to ensure that we can reap the benefits of digital economy. AIIB recognizes the tremendous benefits the digital economy will bring and is committed to bridging the digital divide. I hope that this seminar will explore this complex set of questions, and I thank the prestigious panel members for taking the time to share with us their expertise and experience. I very much look forward to the panel discussion, and thank you for your attendance.
President, you've given us a pertinent overview of the environment in which the infrastructure changes are taking place and the challenges around it. And from the demand side of infrastructure, there are three areas with investment needs for the infrastructure transformation to succeed, and which we will discuss more deeply in the panel. First, the COVID-19 pandemic has revealed the need for much enhanced digital infrastructure. And broadband networks are growing rapidly as platform trade, social media, decentralized work are growing. But there are also huge differences in digital access and connectivity between countries and social groups. In the US and Europe, over 90% of the population are internet users, and in East Asia and South Asia, this number drops to 68%, and in South Asia to 42%. So the digital divide must be reduced. Second, there is still a need for more physical infrastructure, but the existing and new infrastructure must also become more effective and enhance our connectedness via digital and technological enhancement. Third, decarbonization and related mitigation and adaptation measures to climate change warrant huge investments. The commitment to Paris requires that we significantly lower the production of carbon-emitting energy, and this implies a huge surge in electricity demand, so that we need much additional investment in transiting from the reliance on fossil fuels to net zero over the coming decades. How we finance this is another critical point. As the President mentioned, private and public funding needs to contribute. We put much emphasis on connectivity, technology enhancement, green investment, and private financing in our corporate strategy in our projects. Private financing ranges from equity investment, PPPs, corporate financing to project loans. The focus on new technology also requires investment through equity funds. So with all these challenges, where will infrastructure and connectivity really go? Let me now turn to the panelists so that we can discuss these issues. We are in fact honored to have leading experts in the sector that will help us analyzing these changes. And they stand for the public and private sector perspective, and they have a practitioner's view. First, there's Dr. Omobola Johnson, who is a senior partner at TLCom Capital LLP and a former minister in Nigeria, and she is a member of our international advisory panel, so she's well known to us. Then there is Mr. Georgian Cheng, who is Director General at the Ministry of Finance of China and a member of our board of directors. Beyond these two, we have two really eminent speakers from the private sector. There is Hazem Ben Gassem, who is the co-chief executive officer of InvestCorp, which is one of the largest global alternative asset managers. And we have Adi Rahman Adivoso, who is the CEO of Pacific Satellite Nusantara, which is the satellite network of Indonesia. Hazem and Adi know the multilateral banking community well from the financing side and from the project side, and they also work with us and other multilateral banks. So let us now move to the first topic. The first topic is to discuss the impact of the COVID-19 crisis on key infrastructure development trends, especially for digital and connected infrastructure. We have seen an increased demand for digital and connected infrastructure, but will this continue? How can the public and the private sector best respond and address this? How do we succeed? I would like to ask the first question to Cheng Jejun. How are you dealing with the mounting demand on digital infrastructure? How can it be provided publicly and privately? How do we finance it? Do we need to make budgetary provisions to face this surge? I should add that all speakers should feel free to link their answers with previous questions if they feel they have important things to say, and to get a good flow of discussion going. So, Jejun, please.
Vice President again, thank you very much for inviting me. Definitely, I will best to see my speech on behalf of China's experience. If we look back for the past 40 years since opening up, China has been attaching huge importance to the infrastructure development. It's both the goals and also the means. Definitely recently you see this digital infrastructure is gaining more and more attention. After you see during the COVID-19, we have observed you see more significance of this digital infrastructure. From the demand side, recently you see Asian Development Bank, they have issued their latest Asian Economic Integration Report 2021. Which indicate that you see Asia will continue its rise as a major player in the global digital platform market. And also researchers has been estimating that China's investment in this new types of high-tech infrastructure is expected to reach $2.47 billion for the 5 years period covering 2020 to 2025. That means you see the annual growth rate will be around 21.6%. From the supply side, I think there's many players involved, including governments, enterprises, financial institutions, and many others. You see, based on China's experience, unlike the traditional infrastructure programs, which government always pay a good part of the bill, digital infrastructure such as 5G networks and data centers enjoy a much higher degree of marketization. You see, this government has made it very clear that the promotion of digital infrastructure will rely on diversified financial resources, and the market will have the biggest say. Let me spend a few minutes to illustrate you see each one's role. For the government in China, the government's support to the infrastructure is selective. That means currently we only focus on the major strategic and fundamental infrastructure serving public interest. Regarding the budgetary provisions, yes, for the digital infrastructure, you see we still provide limited budgetary support. But among the budgetary provisions, large part were gradually changed into direct support to indirect. That means you see the government prefer to establish the government investment funds to support the industrialization of digital infrastructure through a market-based approach to crowd in more private capital. So the role is changing regarding the traditional one and the digital infrastructure. From the enterprises side, you see a private investment definitely will be the key. We definitely want to encourage private companies, also like equity funds, to participate in this. And President Jin mentioned that his opening speech, since it's you see global phenomena, that means public user finance just provide a small part of the financing. Greatly will rely on the private sector. Here you see in China, we also encourage market entities such as big internet firms to invest in this area. One example is China's tech giant Tencent. They have announced in 2020 that it would invest around $80 billion for the 5 years period covering 2020 to 25 to develop infrastructure, including cloud computing, artificial intelligence, blockchain, and data centers across the country. The third one is financial institutions and the financial market. Definitely, the financial sector is another important participant. We're expecting financial institutions to develop new products and services to boost digital infrastructure investment and development. Innovative financial facilities like infrastructure RERTs, financial models like PPPs, and financial products like credit enhancement, so on and so forth, were all encouraged. At the same time, you see, we're also expecting capital markets to play more important roles to provide direct financing to develop in digital infrastructure. Definitely, you see, colleagues, there's many other players, but I will mainly focus on these three. But also, you see, I have to mention MDB's role. As Vice President Luca mentioned, you see, MDB also have a big role to play in this digital infrastructure. We're very happy to see that AIIB has identified its role in the digital economy through its digital infrastructure sector strategy and made technology-enabled infrastructure one of its 4 thematic priorities. And we're very happy to know AIIB has begun to support such projects like data centers, AI, satellites, so on and so forth. So we're really looking forward to more digital infrastructure projects supported by AIIB. Let me stop here. Thank you.
Thank you, Georgian. I think you have given us a good overview from the government's perspective on the government's role, the private sector, and the financial sector and MDBs. If I can zoom in, Omobola, on the question of the coordination between the public and the private sector, also from the kind of perspective of how to bring together creativity with the public purpose and how the private sector can help with that public purpose, like serving underserved areas, building trust and social cohesion. What is your view? Do you have any examples how this role between public and private can best be done and how it can work well?
Thank you very much, Dr. Ludger, and it really is a pleasure to be here. To answer that question, I'd like to first just, speak about how public and private sector have worked in the past around connectivity. And in the past, what has happened is that, the way that we got the private sector involved in connectivity was really around 2 things: license obligations, and then the aggregation of USP, Universal Service Provision Funds, that were basically given to the communication regulator by the telco operators for them to now develop infrastructure in rural areas. So the license obligations are really from the government that says, if I give you a license to deliver telecom services in this country, you must go to these certain areas because they're rural and they're underserved. So these are really approaches that were very much driven or compelled by governments, and but they were implemented by the private sector. In some instances using government money, in some instances using their money. And there have been varying degrees of success here. I know that there's several hundreds of millions of dollars in Universal Service Provision Funds that have not been used yet to move connectivity to the rural areas. And then for many times, governments has prioritized spectrum prices over license obligations. So if you're demanding very high prices when you have these spectrum auctions, what happens is that you cannot then impose a rollout obligation, because companies are telling you, if you price this licenses so high, I would like the choice to put this infrastructure in the areas that are much more viable and where I can make more money given the price of this infrastructure. So that's what was happening in the past. So we really want to get into the rural areas, and that was a big challenge. But there's something, unless government compelled it. But there's something that is happening now, which is quite interesting, and I think that the previous speaker alluded to this in a certain way, and that is with the advent of cheaper phones with the advent of, even though I speak about Africa, even though connectivity is still expensive, it is dropping very quickly. And so with the improvements of access, with the cost effectiveness of mobile phones, we're now able to deliver services over mobile infrastructure. And so things like mobile wallets, mobile money, microinsurance, micro lending, payments, all of those things are being done over mobile infrastructure and with mobile phones. And so it actually makes the rural areas quite interesting now for the private sector, because if they're able to connect these rural dwellers, what they can then do is offer their services, whether it is microinsurance, whether it is micro lending, whether it is payments for solar for solar power and all of that. So all of a sudden, the rural areas become more commercially viable, and so private capital is now being used to provide infrastructure in those different areas. And to speak about some of the you asked, what are the examples of trust and social cohesion. With the delivery of these services, what it means is that rural dwellers are now connected, but more than that, we now have some data on these rural dwellers, and this data then allows us to provide services to them. And let me give you a very quick example. And I now allude to the job that I do now, which is in investing in tech companies that are solving big challenges across the continent. And so one of the companies that I really want to talk about is Pula. Pula does for any insurance company, it doesn't make sense for you to insure a single smallholder farmer that is farming on 1 or 2 acres of land. These are sort of subsistence farmers, very small scale. What Pula does with technology is that it aggregates, hundreds of thousands of farmers in an ecological zone, and then does all the calculations and allows insurance companies to then insure these farmers in a group. And they can do that for hundreds of thousands, millions of farmers. Now, what is interesting is that because Pula now has access to these rural farmers, what they can do based on the distributed platform that they have developed is that they now understand how much money the farmers harvest, how much money does a farmer have. They have means of actually giving the farmer money. If the crop fails, you can claim and you can get money so that you're not thrown back into poverty. But again, importantly, what it means is that they know how much the farmers earn, they know how they spend their money because they have access to all this data, and they can now provide services a bit beyond that. So they can provide services for lending, they can provide services for health. And so this is what is happening. So that connectivity connectivity to the rural areas that is being driven by private sector is really allowing us to provide services to the rural areas, and more importantly, bring them in to the sort of more formal sector of the economy. And this is really what drives the cohesion and the social trust, because as they get more services, they're more trustful of not only the private sector, but of governments as well. And they do more online, and we get more information about them online, and we can serve them more online. So hopefully that's an example of how rural connectivity can build better trust and social cohesion. Thank you.
Yeah, thank you, Omobula. That's quite fascinating how you describe how the original trade-off, so to speak, between private and public and revenue and service is, thanks to the digital technology, at least in some areas, turning into a kind of a win-win, which becomes self-reinforcing and self-integrating. And I think this is a good place to bring Hazim in. How is your view what's your view about this? How can the cooperation of the private and the public sector, how can that contribute to making digital infrastructure accessible to all?
Well, first of all, good morning, Dr. Ludger, and thank you for the AIIB for setting such an interesting seminar today. And I apologize for the background noise, if any. So let me start by saying that, first of all, the COVID crisis have been really an eye-opener on 2 fronts. And this is very important as we address this topic of the use of technology and the public-private partnership. What are the 2 fronts? First of all is the ease of use of technology, how technology have allowed all of us in the last 18 months to do more with less. What do I mean by that? There's less cost, we can travel less, we can use better technology without having to travel, and we can accomplish as much. But also, more importantly, technology have allowed for a better well-being for humans in general. And I think when we say what is the public purpose a significant portion of that public purpose is the well-being of the citizens ultimately. And I think in a way, technology have allowed for that. We can now do meetings by Zoom. We can be with our children and then in half an hour still do a very important business call or business meeting for an hour and then go back to have lunch with our family or go running or do whatever. So I think that public purpose has been meaningfully enhanced with technology. The second very interesting observation is the solid collaboration between the public and the private sector in the last 18 months to resolve the crisis. I know in the news it's heavily shadowed by government officials and public sector and all the initiatives that they are doing to resolve this crisis. However, behind the scenes, this has very much been a very solid public and private sector partnership to get to where we are today, both on the health front and second of all, on the fiscal front. And I have no doubt that there are some looming fiscal challenges ahead. All the quantitative easings that most of the governments and the countries have put in place, there is a certain cost to them. How to address that cost and how to ensure that our economy does continue in a relatively smooth without shocks will involve that public-private partnership. So really, I am so pleased to see that there have been a solid collaboration in the past 18 months, a very healthy one, with one solid purpose, which is the well-being and the healthcare of the citizens between the public and the private sector. And today, the use of technology. I can give you one example. We have a large healthcare operation in the United Arab Emirates. And the United Arab Emirates at some point in time have asked us if we can manage 2 of their hospital facilities and convert them to a COVID treatment facilities. I can guarantee you the discussions at the board, there was nothing about margin, nothing about what's our profit out of these. It was, let's do it. How fast can we do it? How fast can we implement it? That is terrific. And that is a certain mindset which the private sector have really got accustomed to in the last 18 months, how to collaborate with the public sector for the public good and take that responsibility. And I think if there's one positive thing coming out of the COVID crisis is the private sector developing a sense of strong public responsibility. And that is hopefully the beginning of a very strong partnership with the use of technology across every single part of our life. And how can we be more efficient, more nimble, and more effective in using the use of technology, not only to advance businesses, to advance sectors, but also to what in our mind very important is to make sure that we maintain the well-being of the citizens throughout any society. So I hope that answers your question.
Yeah, thank you very much, Hazem. That is brilliant. We have another good example of this collaboration. And I mean, just to think about where we would be if we hadn't had this excellent initiative from the private sector and creativity to develop vaccines that then have been distributed in great speed across the globe, all with the private sector and the public sector in tandem. And I think we could have a couple of more examples of this here with more and with less technology involvement. And I think this gives this. You also mentioned the fiscal side of this which links me up with a question to Adi. You know, given that public budgets are going to be tight and that we will need a strong involvement of the private sector in financing, what is your experience with private financing, with PPPs in particular? This contractual arrangement is very much talked about, but it's also controversial. Why is this? Where do you see the potential in the digital transformation to use private sector-based approaches?
And let me try to explain what in Indonesia is happening. Before the pandemic, the government have launched the Universal Service Obligation initiatives where the money will be coming from the revenue tax by all the telecom operator. And they have used several methodology to disseminate the digital connectivity the nation, especially the remote and rural areas, which is either underserved or inadequately served. There are two PPP programs in Indonesia. One is fully operational, which is the fiber optics across the nation called Palapa Ring. And our program called the Satria program, which is a satellite augmenting the terrestrial mode. PPP is something new for the government of Indonesia and all for us as well in this particular field. And it's a good experience for all of us. It's not easy. It's complicated. The contractual arrangements needs a lot of tremendous effort by all parties, especially managing the expectations of the lenders as well as managing the demand from the government. This caused quite a strain to the private sectors to manage this. While we have to also raise the equity, and this program that we are directly involved is more than $500 million. So you can imagine from a private sectors, we have to raise more than hundreds of $millions worth of equity side. But the other side that is a project financing, we have done several satellite project financing before that. The nice things about the PPP is that the market has been guaranteed by the offtake arrangements by the government of Indonesia. Now it's questions whether the private sector, who has to raise the debt as well as perform the contract, can be dependable and deliver on time and on target. And I will tell you, AIIB has played a major role in leading the unsecured debt together with Korean Development Bank, while the export credit of France provide the balance. And this arrangement internationally was done during a COVID era, where there was not capability at all to meet in person. So all the negotiations between all the international lenders as well as the legal people are done remotely. So we can see that the digital requirements is very, very much alive, and it takes a little bit longer. Everybody is learning how to do that. And we believe this allows the government of Indonesia to release some of their constrained budget from if it's a direct investment by the government budget, and allows the private sectors to start becoming relevant factors to build the infrastructure. Fortunately, this is our heart. We have been building satellite for the remote areas. Because satellite does have a certain strength in the remote areas, especially in our country where satellite becomes a primary requirement due to the archipelagic situations of our country. So this we have heard that there are certain limit of what kind of the guarantee the government have through the infrastructure guarantee from the Republic of Indonesia is approximately 6% of GDP. That's the maximum they want to limit. So they are now doing a lot of PPP, not only for the telecom and digital world, but also for highways, ports, and everything else. But satellite, I think we are one of the first, especially on the commercial side. We certainly believe it's one of the largest and the most important in the world, and we've been asked by many institutions and countries how we are able to do so. It was challenging, but it was very, very satisfactory.
Yeah, thank you, Adi. I think you've brought us full circle in this first part of our panel, where Georgian started with the importance of having the government set the strategy and then the private sector coming in from, so to speak, the country perspective, and you now telling us how it can actually be made to work with the example of Indonesia, the Indonesian telecom sector, and your satellite engagement, where all the skepticism towards PPPs has reason, but it can be overcome. And we have also seen that It is the technological developments themselves that can improve the social dimension of our infrastructure revolution, and the goodwill and the collaboration of the private sector with the public sector, as Hazem and Omobola have flashed out. So if I may, I would like to move to the second topic for the panel discussion, which is to explore how well technology is being adopted in the traditional infrastructure sector and how this affects long-term financing prospects. And I think the audience always wants to know what works. And I think in the first part of the panel, you've given us some great examples. So let me continue with Omobola. What is your view on the technology adoption rate of the traditional infrastructure sector? How do we achieve the best adoption, the best learning and catching up across countries and regions?
Thank you again, Ludger. My view is that the adoption rate is good, but of course it could be better. And to explain, I'll give a couple of examples. What is happening now is that traditional infrastructure is very much becoming the means by which we actually deliver technology infrastructure. So, for example, power lines. There's aerial fiber that is now pulled over power lines because power lines go into rural areas. So instead of digging up the road again, we can pull them over power lines. So this is electricity infrastructure, power infrastructure that is becoming technology infrastructure. Also, roads, rails in many parts of the continent now. When you build a road, you're almost obligated. You're obligated by the government, or if it's a government building or private sector building, you have to put in ducts beside the road, and these ducts are ducts that are used to then pull fiber. So we're seeing very good ways of collaboration between the traditional infrastructure and the tech infrastructure, where we're using traditional infrastructure to actually deliver technology infrastructure. But beyond that, I think, let me go back to the power examples around adoption rates. If I go back to power, there are two very powerful examples in which we're seeing the adoption rates of traditional infrastructure for tech infrastructure. For instance, in the pay-as-you-go solar, I go back to this example where in the rural areas where there isn't where distribution doesn't get to the rural areas, the only way they can get electricity is through the solar individual solar panels, which will then power their radios, their cookers, or whatever it is. So what is happening right now is with the pay-as-you-go models, you're able to then pay for your solar power via the mobile phone. If you don't pay, you can get disconnected again via the mobile phone. So again, this is a very good way in which we're using technology to then drive traditional infrastructure. The second example I wanted to give was around smart metering, and this is really very, very important because in the past, where what all meters did was to tell you how much electricity you consumed, and many times it would then come sort of the month, 30 days after. With smart meters that are in areas where electricity is distributed, what you can see and what we are seeing is that the smart meters can tell, they give more information about consumption. And so that not only helps the power companies, they help the power companies to understand the consumption patterns and how they can distribute or not distribute in countries that are energy poor, for instance, like Nigeria. It's important for them to understand consumption patterns so that they can actually know where to send the power to and where it's most needed. But on the consumer side, what the smart meters can do is that they actually help consumers to understand their consumption patterns and use that to save energy. And again, saving energy goes back to the big question about climate change. So there are many areas in which, I see that the traditional infrastructure sector is adopting technology, and many of these areas, they're adopting it in a way and a manner that not only benefits them, but actually also benefits the consumers, whether they're in rural areas, whether they're in urban areas, whether it's around saving energy, managing your consumption, allowing you to have electricity when you need it. I've just given the examples of power, of course, but there are many, many examples of which, there's traditional infrastructure. When they adopt technology, they can actually really deliver more to the consumers that they're serving. Thanks.
Thanks, Omobola. Your examples show clearly the importance of good planning, but they also show that actually technology helps to deal with one of the big problems that we've traditionally had in infrastructure, that is to ensure how to pay for it. And this, I think, is a perfect lead over to Hazem, whom, I would like to ask you, Hazem, how do you see the opportunities, the attractiveness and returns of investing in companies that provide such technology enhancement of infrastructure and infrastructure assets?
So thank you, Dr. Ludger. So first I should say that If you look at infrastructure investing as an asset class, the last 10 years have been some of the most impeccable equity returns across the board, whether it's private equity, public markets, and what have you. As we look in the next decade, the next 10 years, there is an argument to be made that infrastructure returns on a risk-adjusted basis, and that's the important part. Nominal returns of their own right mean very little to nothing. What's more important is the risk-adjusted return that infrastructure asset class offers is superior in a material manner to many others. I will take an 8 to 10% return with a relatively low risk profile any day in a turbulent market, which is the expectation in the following 10 years, given the long run we had and the potential fiscal headwinds, which many parts of the world will likely meet and what have you. So what does that mean for the technology sector, the infrastructure sector? I think it's a terrific opportunity for infrastructure investing, for investors to be deploying capital in infrastructure assets. There is what appears to be both from some of the largest economies in the world, being obviously North America, US, and China, a genuine will to commit for infrastructure investing, and obviously what that comes with it. And as I said earlier, what is really very exciting today is this mindset, both in the public, particularly in the public sector, that a partnership with the private sector is fine. It can work. We can actually have that joint partnership in projects and that work. Now, technology in a way is, I describe it as the equity multiplier. So if I can make 8 to 10% on a classic infrastructure investment, and then have a certain kicker on the back of deploying that technology initiatives throughout the infra projects to effectively enhance returns, that is terrific. Now, here's the one issue, though. As infra investors, in large part, we are hostage to the RFP that ultimately comes from the public sector. And the RFP tends to be, as you all know, very, very cryptic, very specific about...
Can you say what RFP is, Hazem, to our
Sure,
audience?
that's the request for proposal. My apologies. So basically when the public tender, let's put it this way. So when a public sector does a certain public tender for an infra project, that tender tends to be very, very specific about the requirements. And there is relatively limited room for maneuver for the investor or that consortium, which is placing a bid on that public tender, to come and say, hey, this is great, but how about we also add this technology initiative within this project, which we work. That is relatively difficult, and but particularly when you're dealing with certain government agencies, it's very black and white in terms of the requirements. So what do I mean by that? How to address this? The way to address this is perhaps for the public sector to meaningfully work beforehand into understanding how technology can facilitate certain infrastructure initiatives and how it can make it much more efficient. That learning curve in the private sector, we have done it the hard. We need to do it because we are chasing the extra return, the extra 1% out of projects. So there is a certain clear need for it. I hope that the public sector does not fall into this this is how we've done it in the past. This is how the last 3 similar projects have been. So in that consultation period, very much make technology at the forefront in the consultation period in these infrastructure projects before they come to bear. But in summary, I can say absolutely excited about the future of infrastructure investing. And I think many of the speakers before me have talked about the many examples of how technology in a very nimble and micro manner have fundamentally changed how the efficiency and the use of many of these infrastructure assets. It makes it for us very exciting to talk about an asset class which could be making on a let's call it leverage basis around 10 to 12%. That is terrific for most investors. And let's not also forget the power of the low interest rate environment we are in. And that provides for a kicker in these returns, which is quite compelling. Now, this is not just about making returns. This is also about expanding the investor universe who have an appetite and an interest to invest in infra projects. Historically, that has been one of the single biggest barrier to expansion of infrastructure investing, availability of capital. Many decades ago, it was very much perceived to be the responsibility of the public sector and the governments to do that. It's terrific to see that the public-private partnerships in the infrastructure front have truly, particularly in the last 2 decades or so, have fundamentally kind of evolved. And there is more to go. It's more not just about funding, jointly funding these projects, but more how to think through how these initiatives, how technology can be indoctrinated into the request for a quote or the proposal stage. And I think many of the examples said by this panel really they're very much from the private sector. So perhaps the private sector does have a certain edge in being more innovative, more nimble, more on the ball in terms of exploring and looking at new ways and new technologies and how they could be weaved into the infra space. It would be terrific to see the public sector also benefit from that know-how, because that is fundamentally the starting point in any proposal going forward.
Thank you, Azem. I think this is a fascinating account, both from the perspective of, whetting our appetite as potential investors, but also at pointing to some of the prerequisites so that these benefits can materialize, including a productive dialogue between the private and public sector, and the willingness of the public sector to take advantage of the opportunities through technology enhancement. Which brings me to Adi. Adi, you as the practitioner in having a major enterprise and major experience on how to do it in reality. How do you see the opportunity to apply technology to infrastructure sectors, also in light of what the previous speakers have said? How challenging is it? How should it be done? What have you got to add to Omobola and Hazem?
Well, all I can do is to share what we're doing. What we have seen from the satellite world in an archipelagic nation is that the connectivity is not the question as long as it's within the satellite coverage. What we see is several challenges that lies in front of us. That one is we call it installed, operating, and transportations to these remote areas, and managing them in such a way that they can be deployed rapidly and economically. But we also found out that in those very remote areas where the government of Indonesia is installing it, there is very limited electricity, or maybe it's not 24 hours, it's not generated by a stable source. So we saw these challenges as what we call a total cost of ownership, not just the connectivity. But on the other hand, it gives the technology and the connectivity an advantage if we can solve some of this issue by giving them connectivity, electricity, and also electronic payment. We have, on top of this connectivity, we have built several areas where they can pay their bills, buy telephone top up, and everything else, and provide other things that it comes. And what we do is we also embraces some of the other people to look at these remote areas. I think Madam Omobola said that one of these, the farming and the other things that needs to become. So connectivity is not an issue for us, but now it's how to get people to be able to enjoy the connectivity beyond just connectivity. We have to basically rush during the COVID to provide more connectivity to remote schools when the people are not able to be connected or not be able to have a face-to-face schooling. So we actually face this now, what we call this the follow-on phase of having the internet in their area, whether it's through Wi-Fi or through GSM, is what benefit can the rural people be from them? Their livelihood is much more simpler, and also we need to figure out how to reach them and not to leave them behind when the world goes to a more digital world. I just want to say one thing, because affordability is very, very important. This PPP program that we're doing right now has given the ability of the Indonesian government to drop the cost of connectivity by 80%, not 8%, by 80%. I think today Indonesia will be the leading price for satellite. It's going to be very low, and it's going to be quite difficult to enter in such a way without such a low price. But we also very concerned about the affordabilities of these remote areas. We hope also, like speaker before us, that we also can add some interesting features or technologies to be able to benefit from them entering into the digital world. So that's the upside, as Mr. Hazim said, that we building their infrastructures. We wanted to make sure anything they go to digital world, we are able to provide their services.
Yeah, thank you very much, Adi. I think that you stress the complementarity of different components of infrastructure, the connectivity, electricity, and financing side, and the affordability. I think these are really all key dimensions to kind of have technology enhanced infrastructure be effective and affordable. Also in rural areas. I think this is a major change, and I feel like I'm learning a lot in this session. Now, maybe turning back to the policymakers and to the policymaker in this panel, to Jun. China has been, for China, building new infrastructure has been a top development priority. But I assume also in China, you have made the experience that technology enhancement can increase the benefits. What are the lessons learned from technology adoption in traditional infrastructure sectors in China? What advice would you give other countries? What advice would you give us as an MDB?
Thank you, VP. Thank you again. Hopefully, I can answer your question. I think it's quite a difficult question, but let me try. Actually, back to 2018, China has come up with an innovation-driven initiative to accelerate construction for new infrastructure, such as 5G networks, AIs, industrial internet, and Internet of Things, so on and so forth. And since 2020, accelerating new infrastructure construction has become a government priority, as you mentioned. Definitely, a lot of achievements has been made. Regarding the experience and the lessons what I can share is, yes, many experience has been learned in China in adopting new technology. For example, satellites has been used to monitor project implementation, to protect land use, especially for farmland. As you see, Eddie also mentioned Indonesia was doing the same thing using the satellites. And the drones are used to monitor the ultra-high voltage transmission lines, especially you see in extreme weathers and remote mountain areas. And the sensors and remote control technologies are adopted in agriculture and irrigation infrastructure, so on and so forth. So we have many experience on that. At the same time, we also have lessons learned from traditional infrastructure projects, which I will not go to detail, but the effect is we have many repeated investments, which will lead to waste of public resources, excessive production, and high debt pressures for some local government, etc. So based on China's experience, lessons, and practices, Personally, I think the following points are very important when developing infrastructure, traditional or digital ones. We want to share with you other developing countries. Number one is a long-term programming. As Madame Omabolo also mentioned this year, we thought this programming or planning is very important, which means we do need a strategic top-level design at national levels. Otherwise, you see infrastructure development might be fragmented. The second one is action plan, which will make sure the program be implemented with a roadmap and a timetable. Also, you see it can provide a quantified way to measure the implementation of those projects. Third one is a coordination mechanism, because you see infrastructure projects usually involves many ministries at central government levels, but also many provinces at local level. So with coordination mechanisms in place, many issues regarding implementation and policy disputes can be solved much easier. The fourth one is monitoring and evaluation arrangements, which will ensure efficiency as well as accountability, especially when we're calculating the public finance efficiency. Colleagues, if you see time allows, I want to share two examples. Both you see, we have two projects, both are financed by World Bank. One is the Beijing-Tianjin-Tanggu Expressway, which is back to last century. In that project, the World Bank suggests China to build two-way 6 lanes road, but we thought at that time 4 lanes is enough. But just within 3 years of completion, it's getting very crowded. Later, you see, we have built another highways and another railway. That means we learned from that project. We do need to, we need to be really forward-looking with better, you see, designing. Another project I can share is a municipal solid waste minimization and recycling project in Georgian province. It was approved in 2013, which is 7 years prior to the Chinese government's official announcement of its waste sorting initiatives. Digital technology was this project for the first time, such as printing QR code, that is a quick response code, each garbage bag, and put chips on the trash cans and trunks to track the data of trash classification and collection. So such technology and practice has been have been widely duplicated in many cities in China later. So this just you see two examples. Definitely, some was experience lessons we learned regarding the technology. Some was about you see the mindset. Before I conclude, you see there's 2 points I want to highlight. Number one is we need to pay equal attention to the hard connectivity of new infrastructure, as well as to promoting soft connectivity of rules and standards. Second one is we would love to work closely with various partners, including MDBs, also use multilateral mechanisms like MCDF, also bilateral development partners, private sectors, to mobilize more financial resources for digital infrastructure, but also promote knowledge sharing on the new infrastructure. Colleagues, let me stop here. Thank you.
Thank you very much, Jun. I think this shows the virtuous circle that technology and digitalization is allowing us to have in the infrastructure area, on the production side, so to speak, on the financing side and on the planning side. I would suggest that we now go to the audience. We have a few more minutes left for questions. And please, as I will allocate the questions, please also feel free to comment on what the other speakers have said on the panel if you wish. So let me see what we have here in the live Q&A. I have a bit of a difficulty to read this, but let me try. So PPP from Nazrul Islam. PPP is essentially a process for mature technology to be bidded in the RFPs issued by the public sector. How can PPP be carried out for tech innovations? That means for unknown, especially for unknown technology. So basically a question on how we can use PPPs in the area of high tech. Who would like to take on that question?
I would be delighted to start with maybe some comments.
Yes, go ahead. Yeah.
So first, for our audience, PPP, as we all know, stands for public-private partnerships, which is a term used to describe when the government agencies or the public sector, together with the private sector or certain private companies, join hands to work on a certain initiative or a certain project. The PPPs, in a way, is the way of the future, for two fundamental reasons. First of all, public sector more and more will need access to the private capital to undertake the ambitious programs. Why? It's a proven model. There's no shape in it, and it works, and that's very important. And that way, hopefully, the public sector or government agencies can divert their remaining resources in other parts of the economy, which are perhaps have a need or could benefit from that additional capital. So I think in that front, that is terrific. The specific question is how these PPP partnerships can benefit from the technology or the innovation that is available at the private sector. I have spent a fair bit of time in the United Kingdom, but also in places like Saudi Arabia and the United Arab Emirates and Bahrain, which is also a very interesting model. And what you see in those, at least in those four regions, which I have some experience with, is prior to launching any projects, the government agency, whatever government agency itself, goes through its own case study, its own learning, its own preparation for that process. And what I've seen in those four countries, the private sector is involved in those thinking, in that brainstorming. It's like, how should we do this new, whether it's a toll road or a desalination plant or a certain e-health initiative. There is that consultation period that very much involves many players in the private sector, corporates, technology, innovators, professors, and I have seen that partnership so powerful. So by the time the particular government agency does issue its proposal for a particular infrastructure project, it has been so well vetted and taken advantage of a lot of the new innovations and new thinkings, both at the academic level and in the private sector, and that works. So really, I've seen firsthand the power of those public-private consultation phases or studies before the launch of any particular project. Thank you.
Thank you, Azem. Omobula, would you like to comment on this question as well, and anything else you want to add to previous speakers?
Yeah, yes, I would. I actually, a great example from what Dr. Hassan was saying is, when I was in government, one of the public-private sector partnerships we had was around incubation centers. And this is really where innovation in tech is being driven, where young people can come in and really, think about concepts and ideas and really begin to build businesses around them. And the way that we did that PPP was almost exactly what you were describing, Hassan, which was basically, first of all, we had a collection of both private sector and public sector officials who sat together to think about what was the best way to build and develop and establish these innovation centers across Nigeria. And what we decided was that the best way to do it was government would put in the infrastructure, the broadband, the computers, the mobile phones, the seating, rent the facilities and all of that. But we would then hand these over to the private sector to run, because government is not that good at innovation. Maybe other governments, but we're not that good at innovation. So it was providing the infrastructure for young Nigerians to come into those innovation or incubation or acceleration centers to basically think about their ideas of how they could solve big challenges. And that worked very well. So we put in the infrastructure, we had private sector running it, we had an advisory board made up of public sector and private sector, all in the tech ecosystem. And I would say that some very interesting innovations came out of that. So that's another very practical way in which the private and public sector can work together to drive innovation, especially in technology. So that's the example that I just wanted to give.
Thank you very much. Thank you very much. Adi, would you like to comment?
We have been searching for working together with the government, and actually we just supported private sectors and also supported by the government in a very different way than PPP. We allow the young people to build a satellite, will be launched in April, where the government was providing a lot of the assistance for the capability to build and all the infrastructures that needs to build a satellite, while we are providing the younger generations the capability and the discipline of building a satellite, because we've been doing this and buying satellite for the last 30 years. So it's a different PPP, but actually it's not a financial PPP. But now there is a strong drive from the young generations to enter the space industry, allows Indonesia to have what we call the third generations of satellite engineer, but now capable to manufacturers, rather just only giving the national space agencies to go ahead with the development of satellite. As China is also saying, Earth observations, navigations, and communications from space is now the outlook for the next decade, and we need to be able to be a part of that, and we would like to see the resources being built domestically and cooperation internationally as much as possible. But we now also having in areas we also provide. We're asking the government now, because they have a certain need for a certain specific mission, that they can provide the guarantee for when we provide the services to them. So in that kind of a situation, we are, because of the PPP from that we are working now, we're exploring many other ways to innovate on a new frontier in the PPP as well.
Thank you very much, Adi. We have just a very short moment left, but we have two questions. The first one, if the private sector is a financer and ultimately asset owner, how can we make sure that it sticks to the commitment and actually implement what, so to speak, the public sector sets as conditions? And the public sector, that tech is included in the design as of day one. And the other question is how to deal with digital divide, especially since COVID-19. So we have 4 minutes left. Perhaps I would like to ask Georgian to give a very quick answer to what you want in this, and then Omobola, and then we close. Thank you.
Thank you, Ludger. You see, I think from the government side, three things. Number one is to set, you see, in terms of PPP development, to set the business environmental. That's very, very important. Second is, you see, to identify what kind of knowledge. Last is, you see, provide just, you see, financial support. You see two things. Number one is technology. Number two is mainly is financial. You see, I want to highlight, you see, importance of MDB. Because you see, PPP not only provide financing, but also you see sharing knowledge from other countries. But the most important is with joining of MDB, the trustworthy can be built between the public and the private sector. Thank you.
Thank you, Georgian. Omobola.
Dr. Lugda, I just wanted to respond to the question, how do you deal with digital divides, especially since COVID-19? And I think, what COVID-19 has done is really, particularly in emerging economies, it's accelerated the divide between the haves and the have-nots of digital access and digital infrastructure. So I think what we need to do as governments, as MDBs, as a private sector, is to really prioritize the provision of digital infrastructure across the different countries, particularly the rural areas where we have the least access. And that prioritization is not just to prioritize. I think Mr. Adi made that point. It's around affordable access. So it's not just putting the infrastructure there, but making sure that this infrastructure is affordable for those that really have, are living on less than $3 a day. And I think those are two things that we need to do to come together. At the very beginning of this session, the president mentioned that there's 430 billion required to get infrastructure across the world by 2030. It seems like a lot of money. It is a lot of money, but when I look at what we've done with vaccines, I think we need to have the same sort of approach to the digital divide. It's for countries, communities, governments to come together and say, this is a priority. And we've got to figure out how we fund it from the private sector, from government, from MDBs, put the money together and ensure that we're getting to those areas where there is no infrastructure and making sure that we close this digital divide as quickly as possible. Because what COVID-19 has done is not just, it's accelerated. This digital divide has always been there. And it's important for us to make sure that we close this divide as quickly as possible, because life is not the same. We have a new normal now where digital has taken even greater priority and precedence in all our lives, no matter where you are, where you live in the world. Thank you.
Thank you. Adi, a final word from your side?
Well, it's a challenge again from the digital devices, because there are the very high end and the low end, and we look at the challenges as a part of the total cost of ownership of entering the digital world. So I think that's a challenge but we are not very good at that, but that opens up a lot of business opportunity as well for the rural areas, because they do need a good internet and a good affordable devices.
Thank you. And Hazim, very briefly.
The only thing I'd say is I hope if anything came out of the COVID crisis is it's made every single one of us better human beings and more compassionate human beings, and more understanding of how we're all as humans are.
I'm afraid we lost you now, even though I would have been very curious what you wanted to say. Maybe we get you back. In case not, let me wrap up by stressing that I think the panel has shown very convincingly how infrastructure is changing through digitalization, how technology enhancement is improving our benefits of infrastructure. It enhances the ability to deal with the rural divide and social problems. And I think in this innovative environment that we are in, there is a great sense of optimism, of what can be done in the future on the planning, technology, and comprehensiveness side. Things seem to be much easier than in the past. On the financing side, things seem to be much more attractive now for the private sector to be involved, which is not to be neglected in the environment we are going to find ourselves in the future. And what I also found interesting is the role the MDBs can be playing in this, not only to leverage financing and to help improve the planning, but also to build trust. And I think this is a perfect ending. And this is also very much in line with our corporate strategy and with what we are planning to do. So thank you very much for your inspiring thoughts. I hope the audience has been well entertained and that we all feel the same as me, that we have learned a lot and are gonna, so to speak, go home from this debate with a sense of optimism and a sense of confidence. Thank you very much.